Hello and welcome to Bazaar Morning Call. We are live from the CNBC-TV18 Motilal Oswal studio. I'm Sonia Shenoy and with me is Latha Venkatesh and Nigel D'Souza. And thanks for being with us early this morning. Well, we begin the day. Actually, it's been a good start to 2023. No two ways about that. The Nifty yesterday recovered to that, all the way to that 18,200 mark or thereabouts. In fact, from the lows that we saw in December, the market is now up almost 400 points. Remember, the low that we hit on 23rd December was around 17,800. So in that context, there's been a good pullback that the market has seen. The Nifty has in fact found a bit of support at that 100-day moving average of 17,878. Now, we have no cues from most global markets. The US market will open later tonight after a long weekend. The flows are also on the muted side. In fact, most Asian markets were shut yesterday as well. So FI has barely sold about 200 crores. DI has bought 740 odd crores. I'm watching for a couple of pockets this morning. The metal space had good long additions over there, so just keep an eye out on that. Tata Steel, SAIL, Hindalco. I guess it's the the reopening trade in China, and that's really aiding the sentiment over there. And let's see. For today, the SGX Nifty should also come up for you on the screen. The last tick indicated that around this level of 18,200 or so is where the market might open, about a 40-50 point cut, but nothing alarming. The pullback has been pretty decent so far, Latha.
I'm not that impressed by the pullback simply because nobody was trading yesterday. Yeah. You could take any positions and wind them back today. Today is the real test. So I would think that Monday the mice were at play because the cat was away. And the true test for the market will be Tuesday. And Tuesday, we, as you pointed out, start with a bit of headwinds. The Asian markets are not looking good at all. Korea and Australia are starting, I mean, these are big markets. That's why I'm picking those. They're starting nearly 2% lower. Korea, I guess, 1.7% or thereabouts. And they're all reacting to terrible Chinese PMI. You must expect that. The economy contracted because of all the waves of COVID. Likewise, we've got small trades in the US pre-market. I mean, they're still asleep, still enjoying the 3-day holiday, but the little bit of trades that you have on Wall Street futures, Dow and NASDAQ are slightly negative. So my sense is that the markets, both Indian and global, will not be too ebullient, too cheerful today because the US FOMC minutes come out on Wednesday. So you want to be a little cautious. You must be prepared for a possible more than expected hawkishness in the FOMC language. And then, of course, Friday, there's also non-farm payroll. But at least till Wednesday, the market will hold on to its horses. So that, for me, is degrees of caution. And that explains why you're seeing the SGX index in the red. But what might be positive is that we're getting the first December data. The banks have all announced, and although they're all small banks, they are very clearly showing the trend that things are good. The CSB Bank, Karnataka Bank, South Indian Bank, even to some extent MMFSL are showing that the economy is greedy for loans. Loan growth has been excellent. So it's not just these three banks, but also a thumbs up for the economy. So I would count that as good news. But, the market is going to look over its shoulder at the US futures.
Well, I'm just looking at the markets, and yesterday was a good start, actually. You want to slice it any which ways. Participation was low. The party started well, though. Maybe the number of people at the party weren't that much. But it's a good start, 0.5% gain, and we ended at the high point of the day. That was something that was good. The Nifty Bank on a closing basis conquered the 20-day MA as well, so I like that. And the breadth of the market was pretty good. So put all of that together, it was a good start to trade. What are the cues we're looking at? Well, the FIs, they've added some short positions. They added close to around 5,000 short contracts odd. And now if you look at it in the last few days, they've gone from being net long to being net short on the index. And that's not such a bad thing because the short positioning is at around 53% odd. The other positive coming in from the FIs is they're writing puts, telling you that maybe they're trying to push up the base from the markets. Maybe we don't go back to around the 17,800, 17,850 odd, because they were writing puts yesterday. 70,000 put contracts were written in the ratio of around 2:1. And a couple of active strikes. The 18,000 put, the 18,100 put, premium between 30 to around 50 rupees gives you a sense that 18,050 could be, a bit of a buy zone, and that could be the near-term support that we're looking at on the Nifty. And let's extrapolate the resistance zone then. So support we have closer to around 18,000, 18,050. But the 20 to the 50 DMA, which the levels are up for you on the screen, that is going to be a resistance zone. 18,300, 18,350, that's going to be a resistance zone for the bulls to get past. Now, since there was put writing, the Nifty Bank as well, normally we don't have very, very active strikes out there. But one of the strikes is very active. The 43,200 put, the open interest was up by more than 10 lakh shares and the premium is at around 260 odd. So you just extrapolate that and you get your support zone. That's between the 20 and the 50 DMA. So the Nifty, we have a resistance zone between the 20 and the 50 DMA. While on the Nifty Bank, the 20 to around the 50 DMA will be a bit of a support zone. The SGX Nifty suggesting a bit of a pullback. I think if you get a deeper gash, maybe around 80 to 90 point downtake, maybe risk reward will favor you. Though volumes are expected to be relatively lower. Maybe in the next couple of days you'll see a pickup, but let's see how this goes. What else, Sonia?
Okay, well, lots to talk about, right? The Nifty Metal Index, by the way, hit a new high yesterday, and you were talking about the upgrades that came through for a lot of these companies, Tata Steel, JSW Steel, etc. So we'll keep our eye out on that entire pocket today. And of course, as we head into the earnings season, we have TCS coming up on Monday. So ahead of that, the IT stocks will also be in focus. But before we start, let me tell you what's lined up in the first half hour of the show today. We'll get you updates from the markets across the globe. Rana Gupta of Manulife Investment will be with us to discuss the global trade setup. Later, our research team will bring you CNBC-TV18's list of top 10 stocks for the day. At around 8:30, we'll do a fundamental stock analysis with Dipan Mehta. He'll be joining in just a while as well. But first up on the equities front, GV Giri of IIFL Institutional Equities says in 2023, India's economy should continue to exhibit strength based on many macro indicators, including strong government revenue collections, low corporate and bank leverage, and stable external positions. He said this should not only insulate India to some extent from a global slowdown that sharp interest rate increases in Western economies will cause, but also prevent Nifty multiple premium compression, though the index itself may give only modest returns. He says they favor strong idiosyncratic earnings growth at reasonable prices. IIFL top picks include Bharti Airtel, SBI Life actually, Interglobe, NTPC, Bank of Baroda and Sun Pharma, while Wipro's, Divi's, Shree Cement, IRCTC and Aarti Industries are sell calls for them.
Okay, now we go over to money market views, and this one comes from Bhaskar Panda of HDFC Bank. He says in 2023, we could see predictable movements in interest rates, but geopolitical scenario remains volatile. He says the dollar index has been hovering near crucial support levels while oil remains elevated in an Indian market. He says the new year has brought in hopes of stabilization in dollar rupee after almost an 11% depreciation in 2022. He expects the dollar rupee pair to consolidate in a range of 82.5 to 82.80 for the day.
Okay, and on the bonds, Bhaskar Panda says Indian bond market yields rallied by a few basis points, especially due to announcements of higher than expected state borrowings. He still expects more range-bound movement as of now. He says the 10-year benchmark bond yield is likely to hover in a range of 7.3 to 7.35% for the day.
Well, we have a lot of stock-specific action to track for you, and we'll get to that in just a bit in our special Top 10 segment. We'll look at Mahindra Financial, ONGC, Hindustan Zinc, PSP Projects, South Indian Bank, Karnataka Bank, and CSB Bank. They are stocks on the back of positive news flow. On the flip side, you have Zomato, Reliance, and Oil India. They are stocks that could react to the negative news flow and could open up in the red.
Just a minute ago, I spoke about the Chinese PMI, what they call factory activity.